So we got to start with Nvidia. I know you're not a chip analyst, but I want to talk to you about what Nvidia signals. Strong report overall, according to our Arjun Kapal and many other people. It was just that one segment that missed. We're talking about data center revenue, and this stock is actually 1.5% lower. Is that a sign of the sentiment in the market in your mind?
Well, I think there's two things that we have to keep in mind with the NVIDIA report. The first is that obviously this is becoming an economic indicator. It's such a critical variable when we think about AI and secular growth. So there's going to be a lot of kind of narratives that are built around what NVIDIA does. But at the same time, it is a stock, and there's going to be sentiment that's built up around it. It has to report its results, and there's going to be kind of froth and anticipation around all of that. So I think when we're looking at the results that we saw yesterday, I think we can say that the AI theme was reinforced. But of course, there is a lot of froth around NVIDIA, around its results, and we're going to see that volatility as a result.
You know, as I mentioned, a lot of notable market voices, Gene Munster among them, believes this was an overreaction. He actually believes the stock's going to turn positive at some point today. The direction of Nvidia, is that a direct read on your mind on the Mag 7, the AI trade, and just the direction of investors, whether they want to focus on these mega cap tech names or broaden out?
I think if we're generally, looking out over a long period of time, I think NVIDIA is one of those indicators on the health of AI. But I think if we're looking at kind of data point by data point, I think this is something that valuation plays a pretty big role. So I think looking at how NVIDIA is reacting today isn't necessarily going to be an economic indicator or even an AI indicator as much as it is an indicator of where valuation sits.
All right, one other thing to talk about. It's hard to believe it was only a couple of days ago because we're not even thinking about it anymore, but the Fed and Jackson Hole, a dovish Jay Powell, but we have some very key economic reports coming up, including one tomorrow with PCE. How are you viewing the Fed, the Lisa Cook drama, the idea of Fed independence, and also whether the Fed's actually going to cut coming up in about 2 or so weeks from now in their September meeting?
Yeah, pins and needles around the Federal Reserve monetary policy. I think there's a few things to think about here. One is the September cut. Powell has said, in his Jackson Hole speech that a policy pivot may be in order given the new trend that we saw around labor. And so I think there's kind of less anticipation there and maybe more questions around whether we're looking at an extended rate cutting campaign. And I think that's a bigger question mark. If we're looking at where futures are pricing, it looks like, a handful of cuts this year extending into next year. And if we have that longer rate cutting campaign, that would suggest that the labor market is actually weaker than maybe is priced in today. So that's something to consider. Our estimation is that when we're thinking about what's happening on the inflation front, when we're comparing that to this no hire, no fire market, not necessarily a layoff market, we could be looking at 2 to 3 cuts punctuated by pauses, but not necessarily something more extended. And I think that's a critical consideration today.
All right, so Marta, I think everybody today is trying to figure out where they want to put their money to work, whether they want to buy the dip or at least this pre-market dip right now when it comes to the NASDAQ or put their money somewhere else. You like the AI trade, but you say healthcare and small caps, that has more safety to it. What do you mean by that?
It's kind of an interesting thing because if I were to fall asleep today and wake up in 10 years, I'd want a piece of that AI trade. I think this is something that is a secular growth driver for the US. But of course, valuations are quite high. They're not just high, though, in tech and AI. They're really high across the board because, of course, it hasn't just been tech leadership. It's been industrials, utilities, financials. It's actually been a reasonably diversified rally. When we were looking for opportunity, that makes it a little bit harder to find here in the US. But there are these 2 areas of absolute value, and that includes small caps and it includes healthcare. Now, there's plenty of headwinds for those areas, but arguably those headwinds are priced in. So I think there's room to have some AI exposure, but also look for these absolute value plays that exist today.